We're taking a closer look at the Zimbabwean market now, and for that, Tino Kambasha, who's head of sales trading over at Imara Edward Securities, joining me at the desk this morning. Tino, thanks so much for joining us today. Well, at the top, let's explore some of the business environment that we're facing in Zimbabwe right now, because of course we know that liquidity in the country has been a problem. That's triggered funding problems. It's triggered high cost of funding, and that in the face of very real costs on the ground as well. So one can only assume that that makes doing business in Zimbabwe right now very difficult.
Yeah, it is very difficult on the ground, and you did mention that the cost of funding is pretty high. Right now, interest rates we're looking at between 10 and maybe 25%. So it really depends on the company and what type of funding you need that for. And real costs in terms of utility bills, water and electricity, very expensive now. Coming from Zim dollar days, which it was next to nothing, and it's now making up a big percentage of the costs of production and of doing business in Zimbabwe.
How does that influence your sentiment towards investing in Zimbabwe right now? I mean, well, we talk about the dollarization of that economy as having been something positive, but it presents very real short-term challenges.
There are short-term challenges, and in terms of capital raising, okay, so going back to hyperinflation days, the end of that needed a whole lot of capital to recapitalize the companies, and it presented an opportunity for partners and other players to come in. But for the companies themselves, it's been quite a nightmare, especially with such interest rates as we mentioned before. But going forward, it's looking quite positive, and on the ground, some of the companies are looking pretty good.
And that's exactly what's enticing foreign investors specifically towards Zimbabwe. I mean, we've been talking about this time and time again, that what's actually propping the Zimbabwean market up has been foreign trades that we see on a daily basis, but centered mainly around your blue chip counters.
Yeah, we don't see much on the other side. And with the foreign sentiments, because of what's happening globally, we've seen good news coming out of Germany and the United States in the last couple of weeks. And that has given more confidence for companies to take riskier investments as such. So we have seen some activity from foreigners. But the problem is that we have a very tightly held scrip. So there aren't any free floating shares in the market. So this then pushes the price up, and the demand has been there in the recent weeks.
Two companies that have really stood on your radar screen has been one of them, first of all, Insco, and the other Delta. Now, these are companies with exposure to the Zimbabwean consumer specifically. Let's touch on Insco, recently out with numbers, reporting an increase in full-year earnings of 48%. This is a fast food retail group in Zimbabwe, and one would assume that there's some surprise at the kind of numbers that filtered through, given the difficult environment and economic challenges within the country right now.
Well, with Insco, it's basically a farm to fork model. So basically from the farm the whole way through to the fork. And they've got a brilliant model and great management that's running the company. And basically it's an issue of small ticket items. It's not that expensive to go get a meal. And Insco has priced their food quite well, and it moves quite fast. So it's a margins game rather than anything else.
What does that say about the state of the Zimbabwean consumer right now?
It means that the guys on the ground, you might not have a lot of money to save, but you've got money to consume. So we haven't reached the saving stage yet. We are still basic consumers on the ground. And that's pretty good. It's showing us that we are in a recovery stage, and we are building to that. So we start off by consuming, and then banking, saving, manufacturing, and then buildings.
Of course, we've got the Delta leveraging off this. And the interesting thing about a brewer in any economy is that they seem to do well, whether it's good times or bad times. People drink whether they're happy or sad.
So true. And now we're entering the fourth quarter, which is Delta's happy time, December, and their numbers are also looking very good. Volumes up 19%, with the PE rating there of about 13 and a dividend yield of 2.57. It's looking pretty good. And again, management.
What do you make of its muscle within the Zimbabwean operating environment? Because there was talk about Delta really consolidating, its market power, recent investment, intensifying its dominance of that local brewing industry.
They're focusing. One thing about Delta, it seems like they compete with themselves. So, if you've got people drinking different types of beers. They've got different levels, different areas that they're targeting, and they're pushing their marketing. They're not relaxing. They are the dominant brewer in the country, but they're not relaxing at all.
Exactly.
More than 80% of the market share, but not slowing down.
And certainly improving their product mix as well.